Thank you, everyone, for joining, and great to have Kelly Mathieson on the show today. My name is Benjamin Duve. I'm the Global Head of Partnerships at GK8 by Galaxy, former central banker, banking executive, and many other things. But more excitingly, I have Kelly here today, who is the Chief Business Development Officer of Digital Assets, also a little bit known today's around the Canton Network for, I think, the last 9 years. So already for digital assets, a legend, but I think there's a 40 years in the industry spanning from JP and Goldman. So also very traditional background and perspective for a few days. Great to have you on, Kelly, and thanks for joining.
Thank you. I'm just so looking forward to the conversation today, and hopefully a bit of that background, a blend of the TradFi and the increasingly DeFi and crypto market will make for some interesting discussions. So I'm really looking forward to it. Thank you for having me.
Yes, thanks for being here again. And the question everybody usually asks is, how did you get into digital assets, right? I mean, having and looking at the firms you're working, it's not the natural next step to go in a nascent new industry, maybe. But perhaps beyond the CV, what were the little
What
things?
was
What were
it?
the
What was
discussions, the
the
triggers, right?
Yeah, what was the trigger?
Yeah.
Yeah, not only was it a nascent new industry, this was now back in 2015, 2016, when I had started to get to know a brand new organization that was really just emerging. Had only really just gotten off the ground with the founders, the company Digital Asset. So it was not only like a nascent new industry. It was a new organization that had just a handful of people compared to the 250,000 plus that I was working at JP Morgan. But I think and so really unproven at the time. It was definitely in the leap of faith category. But what was really compelling to me, actually back then, and I will tell you, Benjamin has stayed pretty consistently throughout my whole continued career with digital asset is genuinely, and we should chat a little bit about this, genuinely the notion that this technology was going to transform how financial services, and really particularly the area that I was in, the financing and security services, capital market side. I had been as you had noted, I'd been at JP Morgan for what was then about 26 years, but for about the last 10 years, I had run the clearing and collateral management businesses, which were wildly interesting in so many ways, but also candidly wildly challenged by, particularly post the 2007, 2008 crisis, particularly challenged by getting access to real-time accurate information. And so, when I first came across this technology and this group of individuals, I thought, well, this is a technology that, if grown and developed well, is literally going to change everything. So it was really a direct connection between what I was managing, privileged to manage, challenged to manage at JP Morgan, and what I was hopeful this technology would start to change and how those products and services were done. And then that's been the experience. So it's been a long experience over 9 years, but that's been the experience so far.
Yeah, I think that's sometimes the discussion I have with people, why does it take so long? But I think the problems to solve are so big, right? So I don't think it actually
Right.
takes long. It's just a very complex ecosystem where you try to deploy something quite new, right? And maybe that leads to an interesting question when you look at digital assets as a company,
Sure.
then also now the evolution into Canton, right? How did that evolve? What are the lessons learned? Is there something to generalize? Because I think there are few players as a company, but few people also so long in the industry. And that's something everybody always asks for, especially when I have these more crypto discussions nowadays. Some of those guys are in there for a year or two.
Yeah, it's interesting. And I think like many organizations that are new and emerging, especially with a new and emerging technology, I think first of all, you're quite right. 9 years seems quite short when you consider it's the creation of something that didn't previously exist and applying it to areas of financial services for which solutions were either previously impossible or impractical. So it kind of seems like 9 years in that regard would be pretty fast. But the like any organization of this age and stage, probably many that you talk to, you go through a series of ups and downs in terms of trying to develop your product and service, listen to how the market is evolving. In this case, there's a huge regulatory element to the adoption and use of technologies like this. So Canton itself was probably shaped from all of that. And while that's true, there's one principle that I think personally we spent myself and others spent the most time on, which is wanting to be able to get the best of these emerging technologies that had a decentralized approach. The idea that you and I can be using a common shared ledger and not have to have duplicative separate operating stacks, but to be able to elevate that to the level of still maintaining privacy and control that's required for financial services. So, I'd like to tell you that our particular story and even my personal experience with it was this perfectly straight line of perfectly clear thought and development that lined up, and it just simply took 9 or 10 years of effort to be able to get to that point. But that is not how it goes, right? It's an evolution that is a series of fits and starts. But for what sort of maintained focus was wanting to make sure we were adapting and creating a technology that took the best of this decentralized crypto effort, but could apply it to financial services that maintain the principles of privacy and control. And that's honestly, Benjamin, it's probably been the defining point, not just for me, but for my colleagues at Digital Asset as well.
And if I from an outside look in and see that creation of the network and the technology not being there for the sake of technology, but the network and
Yeah.
the opportunity, that seems to be one of the essences in the end after in the evolution, or how do I see it? Because
No, I think
I
you've
think
said
you
it.
first pitched the technology stack, right? When I recall the very early days, right? You also did, and now it's an actual network where you can
Now
do.
it's a network, right?
I
Yeah,
think
yeah,
that's
yeah.
a
Yeah,
huge.
it's kind of like we were saying in earlier this morning, and this is so fortuitous that I'm getting time with you guys today. It's a bit of a true full circle moment for me because if you reflect on what I've just said, that part of the reason I was attracted to this collection of individuals that were founding the organization and the organization itself and the technology was really more looking at what I had had the pleasure and the privilege to run at JP Morgan, saying, yeah, as great as that was, it needs to change. The full circle moment is kind of exactly what you say. It becomes less about the technology and it's more what you're doing with it. Are you beginning to see those transformations occur in the industry? And the reason I say full circle today is just this morning we had the privilege of being part of a working group that include a number of leading institutions across the industry, not the least of which includes DTCC, DRW Cumberland, Virtue Financial, TradeWeb, Circle from a stablecoin perspective to do an announcement about a repo transaction that was done with an on-chain US Treasury and an on-chain cash leg, in this case it was Circle USDC, done entirely on a Saturday, outside of normal market operating hours, evidencing that it can be done real time, 24/7. And so the reason I keep saying it's full circle, Benjamin, is because when you come back to it, you think what what previously defined the challenges that I was dealing with and others in the industry is access to data, the ability to have liquidity 24/7, the ability to be able to have access to more real world assets, balance sheet efficiency. And just with this one trade on January 26th, I think we are going to see the doors open to those things beginning to transform. So it's quite a privilege to be here with you on the day that that's happening.
Yeah, and what a lucky coincidence for us. So let's dive into that a little bit,
Sure.
with one or two questions. So this thing, because I've seen it in the past, right? The ability to settle treasuries for collateralization or other purposes, repo being one, right? Outside of the current settlement windows is quite a big opportunity because I think that's where a lot of, and I think people who are not into finance, that's where a lot of banks struggle because they have to put treasuries and other securities, place them around the world to collateralize CCPs and others. So basically put it somewhere so they have money in the right market when it opens or when they have to have activity in it. And that 24/7 means you can use the money which people in crypto are used to when they start, right? But it for banking, so you can follow the sun. But is that when you originally joined, is that one of the things you really dreamt of? Because I must imagine that 10 years ago, right, before you dived in, that was a dream. You probably just wanted more data and the ability
Yeah, it was
to know when you had
probably
it, right?
maybe I'll say it more proactively. It was a clear goal. How we were going to get there and how it was going to happen is part of the journey over the course of the 9 years. But I will tell you quite candidly, as a bit of a story, and there are definitely some people that will hear this podcast that will remember that they were there and part of it. That first summer in 2016, after I had joined Digital Asset, I remember writing a bit of a document to, and actually it was something that we were sharing to some of our investors at the time, but a bit of a document to say, okay, coming fresh out of security services and capital markets and securities financing, what are just very quickly, what are the ways that I thought this technology could apply to some of those spaces. So I did a bit of you know how we used to call it the value
Yeah.
chain? I actually called it the
Yes.
value map because I was trying to find a slightly different way of phrasing it. But
Good marketing.
right, and to suggest that it wasn't a sequential, we always did it with
Yes.
the chevrons, right?
Yes.
Yeah. So I was trying to make it sound like it was be something that was more of a live web or a live ecosystem. But anyway, I had written up this document. I still have it. This document that was the value map and how this technology could apply to it. And one of the very first things I wrote about, not quite the way I describe it today, and I've become more eloquent at it and more certain in the application of the technology to it. But one of the things that I had first written about was how this technology, I really thought would start to change everything in collateral management, margin management, and securities financing. And if I can tell you just why, there's a sort of an interesting stat that has definitely changed over the years. The numbers keep going up, but the stat itself doesn't change. And I think the latest round of numbers is that there's 260, 270 trillion of high quality liquid assets, marketable securities that are available in the world that would be in demand for use as collateral, margin, against loans in some form of security financing or other, but only about 10 or 11% is actually ever used. It's 28 trillion, which is an enormous number in and of itself, but it's still only 10 or 11%. And this used to drive us nuts in my old business where you just wanted to get access to more assets to be able to meet margin calls or collateral calls more efficiently or in a more accurate and cost-effective way. But you couldn't get access to the assets for the exact reason you say. They're sort of trapped in their different markets around the world. If you were my counterpart in an Asian market and you accepted U.S. Treasuries as good collateral, well, it's now T plus one, but let's go back to
Yes.
2016 where it was T plus three. I would have had to deliver it out 4 days ago for it to be able to settle T plus three with you in terms of a transfer in order to be able to use it maybe for a margin call that I receive 4 days from now, which means it never happens.
And so it's a very interesting concept, right? Because if you contrast it to the crypto world, and I mean
Mhm.
maybe that's an interesting discussion to get. There's so much inefficiency. I think that's why and maybe you can add to that as well. That's why it seems like the business cases around collateral margin, collateral management, securities finance are the ones which are their hype and hot right now is from my perspective, and I assume you share that, is because there's so much value locked, right?
Yeah.
So it makes them economically efficient, right?
Yep.
But
Yep.
if you look at the crypto ecosystem, if the underlying assets are 24/7 and digital anyways. I mean, the other, you still do securities finance and so on, but the pickup from moving stuff or moving stuff from A to B has always been there, right? So it's a
Yeah.
it's a fun thing, right? Where
It is a fun thing. It is, I mean, it's also deadly serious, but it is completely fun. And I think you've hit the nail exactly on the head. The reason I get so excited about this is it's a use case or the ability to get global collateral mobility of real world assets that are in demand for use as collateral has a number of opportunities, some of which are more relevant to TradFi, some of which are now amplified by the emergence of crypto. But it's kind of like the everything old is new again. I mean, it would have been a challenge if we were doing this podcast, if podcasts had existed 20 years ago. And the challenge is, first, I want access to all of my assets. Well, as you know, and you know this better than anyone, if I'm using multiple custodians or if that custodian's using multiple sub-custodians, important fact, my assets are all over the place. They're parked everywhere around the world. And in order to be able to move and mobilize them, there's a cost, there's certainly a time consideration. And am I
that's
only
the
able to,
worst, right?
right?
Time is really the cost. I always have this discussion. Settlement cost, yes, and let's internalize and make it efficient. But the loss, right, of intraday repo, intraday liquidity and financing, that's and the
Yeah,
numbers, you
it's
just mentioned the
bound
amount of
by,
numbers.
I sort of joke and say to people that, in my lifetime before I'm done working, it's every transaction that's done is usually defined by settlement, credit, counterparty, and market risk. But like sort of the dirty little secret is it's really settlement because it's the 800-pound gorilla in the room. If I like you as a counterpart, know what credit I want to use, and am comfortable with the market risk, that's all good. But I can only do what I want to do if it's during settlement windows, if it's during the settlement times and the batch processing times of a legacy system, or if it's during market operating hours. So it's when you ask about the TradFi meets, it's sort of it meets crypto, a convergence of opportunity here. I could be having a perfectly and only TradFi conversation with you about access to more assets, liquidity, and balance sheet efficiency. But now, if we're going to also talk about organizations that are active in the crypto markets, they need it to be real time and 24/7. And it's those collection of challenges that I think have really lit the fire underneath a number of leading market institutions to say, we are going to solve this. And the press release we had today, or the announcement we had today, wasn't just DA. In fact, DA was only a piece of it. It was a collection of industry participants that came together to solve it. And yeah, the technology tools are there to do it, but it's really, I think, that clarity that you're talking about, that clarity of purpose where all of these market issues are now coming together in a way, and the technology is just the way you can solve it.
And the question there is, I always have the following, it's great, and I think we solved a lot of the technological issues. And if we're honest, also, if you look in the DeFi crypto world, if you look at some of the mechanisms, they're just called differently and they're technologically solved and they work, right?
Yep.
Maybe not at scale yet, but many times they work, but it's an ecosystem that has to move together. Otherwise, you fragment liquidity, you leave certain players out. If you don't, then the whole system doesn't work as seamlessly anymore. That's why having, for example, DTCC in a use case makes a huge difference because I mean
Huge difference. Yeah. Yeah.
the majority of assets that are relevant in these cases are within the DTCC or can be custodied by the
Yeah,
DTCC.
I will say, I mean, all due credit to Frank Lasala, Brian Steele, Michael Winnicky, Doug Myers, who've had the vision to really partner with their market participants to figure out how to solve this from an ability to immobilize the real world asset, have it expressed in an on-chain form, and then be able to be used. But I think your word about an ecosystem, you had mentioned it earlier with the network, and the ecosystem is exactly the right way to think about it. These aren't single purpose products or services. They are multi-party in every conceivable way, and then multiple numbers of parties all over the world and all over different types of markets are becoming bigger and bigger. I think what's critical about what you've implied with the idea of an ecosystem is, and it goes back to what we were saying about Canton. I mean, the truth of the matter is blockchains, but Canton in particular, and I'll only speak to that one, is just a new form of database technology. I mean, yes, there are brilliant engineers at Digital Asset and some of our partners that are crafting it, and I don't want to suggest
You
that
don't
they're
get any internal emails after
but
this
it
point.
real I know they're really going to hate this, so I don't want it all to belittle the amount of effort it goes into being able to say something so simple. But really, it just is a new form of database technology. The difference is, though, is in say our prior roles, Benjamin, we would have each had our own separate duplicative operating systems. We probably had multiple back
Yes,
then, right?
unfortunately
And
multiple,
multiple
and then they didn't talk to each
databases.
other.
Yeah. I mean, it was never just one, but multiple. And there would be give rise to a number of operations colleagues that we would have had in each of our organizations would have lived to exist to do nothing other than to reconcile between our multiple databases. The difference is now in the solution that we just wrote about, but in everything that's going forward and in the multiple applications that exist in Canton Network already, is that shared database now is a common shared database that you and I are using. You have access to your information with privacy and control. Sovereignty might be the way I say it. And I have access to mine. But together, nothing gets written to that shared database unless you and I agree that it is valid and accurate and can be written. And by doing that, it means we no longer need to reconcile. And this is such a simple notion, a simple change in financial services that I think is going to give lift to an amazing number of transformational opportunities because it's really just gone back to the core of how we would work together. And you think about the speed with which now we'll be able to interact when we know that the data that we share together, the transactional information we share together, is never out of sync and is commonly agreed by anybody who is a party to it.
So let's take that theme, right? I think we have that theme, the evolution of the TradFi ecosystem, if we can call it, right? The innovation in the digital assets space, they're digital assets broader than just the company, right? But then there is also this, and it's maybe more centralized. It looks a little different than when you look at, and I'm part of Galaxy, so we also look and talk to the other side where that more open, disruptive, less trust, more archaic kind of setup is. And that also has a lot of interesting aspects. And I think we learn from them as well in taking the traditional hat, but on the crypto side, they actually have use cases that make a lot of money right now. So
Yeah,
they have a commercially
extremely
currently
commercially
more
successful.
viable ecosystem than the traditional finance digital ecosystem. I think as of now, but that's just a hunch. Nothing I can give numbers to. But how do you see those two worlds develop in parallel, and how does that convergence, if any, I think I have it, I think you as well as I understand also see that, but how does it happen, and maybe what's the wallet attribution at the
Yeah.
end? I mean,
No,
it's
it's
a
as
very
I was saying.
interesting
Very
discussion.
interesting. Very interesting. I think, as I was saying, I think in particular, Galaxy, very commercially successful in those efforts and the creation of new products, which in the end of the day is going to be the proof of everything, right? It is, am I able to create something that has real value, where that value is, among other things, measured by the ability to gain new clients, gain new revenue sources, and be commercially successful. But I think, when I think about the core of what that convergence is that you talk about, I think, ironically, I think most of the things we could be talking about them almost at any decade in recent financial services. It just applies with a different level of speed. Atomicity is a word that tends to be used in this space, or real-timeness. I'm not sure if that's a word, but the real-time nature, because it isn't simply just about getting access to liquidity, to accurate asset information and availability. You have to be able to transact, not just simply access the data and have that information to say make informed decisions and have real-time risk and controls and information that enables you to decide what transactions you want to do. You then actually have to be able to do those transactions real time. And I think that that's what's transformational about where you're at. And when you say sort of, I think that we both get it. What you're getting is all of this good thought that would have previously existed in the TradFi and even in the early days of the crypto markets about how liquidity, 24/7 availability of assets and transactions, but the ability to be able to transact them to have, and now I'm going to say something that's really old-fashioned, settlement finality and
Oh yeah,
certainty,
that's a great one.
right? But
That's
but
a
to
central bank term. We use that a lot in the
but
central bank as well.
but to have that and have that with, as we said, to build on our last point, to have that with certainty of the database record that is supporting that transaction, the ability to have anyone who's a party to it know that they're in full sync on the state of that transaction the status of that transaction at any point in time. And that to me is the convergence. That's why I think you see organizations such as yours, such as others that are active in Canton Network, having such demonstrable, notable, measurable, visible success. So I think hopefully we'll see even more of that coming out. But I think that's the angle. That's the difference.
So the one thing I have these discussions naturally also with the crypto guys, right? So
Yeah,
and you
yeah,
talk to them and they say, well, there's no problem. The moment a block is formed, right, there's no going back. You actually have finality, and we don't really have to trust each other. We just have to trust the mechanism and the risk, the blockchain or the ecosystem in this case, right? Let's use the ecosystem, the specific layer one ecosystem we're using, that we're comfortable with the technology risk of that. And then the moment the block is created, we have some, or we actually do have finality because there's no going back. And then there are these theoretical discussions where it could and couldn't. But I always find it quite interesting because they come to the same conclusion we come to. You need to be sure that a good handed change hands from one place to another. That's what they're solving as well, right?
yeah, yeah,
Question I have, if I look at the ecosystem, right, and I look at wallet attribution, and we look maybe 10, 15, 20 years down the road, I think, and maybe you can comment, that there's a certain part of the ecosystem which will be in that more curated, technologically much advanced digital asset ecosystem that's an innovation out of the traditional finance sector. And I think there will still be that part where you have that Eldorado, more, maybe less regulated, more open ecosystem on the side, right? I think it's very difficult to put that back in the box.
yeah.
How do you see that? Or do you agree? And how do you see that play out? And if you would attribute weights, is it like, what's the split there? Is it like
Yeah, what's the split?
80/20
Well,
or?
I do agree. And my gosh, I hope it's always that way because I think what you've just defined is what at least my personal experience has been over my entire career in financial services. There's always, a bit of a bell-shaped curve where the bulk of the bulk of the curve are those organizations that have really embraced and adopted newer technologies and are integrating them into their core systems and making it a way of, a run the bank, right?
Yeah.
Type of, to use an old-fashioned phrase, a run the bank type of way of conducting business. Some that are, at the end of the curve, but the bulk of it. But then you always have those organizations that are pushing the edge of the envelope, trying to figure out how to do something with more clearly defined risk or a more competitive edge in the trading or investing marketplace, the opportunity to reduce expense so as to eke out more return on the use of an asset or the creation of a security. God, I hope it's always like that, right? But what I see now is it's an interesting and frankly somewhat encouraging blend of organizations that are really beginning to drive this transformation. I mean, you look at just our press release today has some of the more stable and industry-leading organizations like a Bank of America and a SocGen, DTCC, and organizations that have been known for their innovation across the years, such as a TradeWeb, and then organizations that are driving this edge of the frontier in terms of being able to transact seamlessly across TradFi and DeFi, like DRW Cumberland and Virtu and Citadel Securities and Circle. So just the chance to put that sentence together with all of those names is really something, right? And I think is really it's probably the leading indicator of where the market is going. That is making it about a seamless TradFi DeFi. I don't know. We need to come up with some new name for it.
Yes.
Um, but it's a new market experience that I think is being fueled by exactly what you're describing.
And I couldn't agree more. Now we are also at time.
I know we could
Such an
keep
interesting.
going.
We could have continued, or maybe I should add an extra half an hour to the format so we can continue the discussion because it's so interesting. So again, thank you, Kelly, for your time and also sharing some of your personal experiences. And congratulations to the very interesting use case you just presented here today. And I'm happy to have this opportunity to be one of the first one to talk to you about it. And hope to see you again in person, of course, soon in New York, but also have you on at some other time with the next big announcements. Thank you to you, Kelly, and thank you also to the audience for joining.
Thank you so much. Thank you to everyone who dialed in. It's been a real privilege to have this conversation with you today.